Good evening, folks. Hi, it's Mr. Intermarket Analysis. I'm just doing a video late at night, given the price action over the last 2 days since I last did my video. Interesting times, shall we say? Very, very interesting times. Obviously, the market right now is juiced up on QE. We've had the FOMC meeting today, shaking the tree. Thank God for that. Hopefully, we should return back to some normality now. The fact that the Fed has stated that they are still open to tapering in December. Obviously, a lot of individuals expected a lot of dovishness. Certainly expected the Yellen, shall we say, government, because it has become a government in a way, in the fact that it does affect all global markets. The fact that the markets have been going vertical based on the QE juice. All these crackhead, I call them crackheads anyway, they're literally destroying the markets because all bearish patterns are fading, all resistance is literally being disrespected. The market just keeps short squeezing everybody and going to new highs, but that's fine. I mean, don't get me wrong, I'm not against the markets going up, but when the markets are going up without any foundation, without any base, without any fundamental support, then it creates a pocket or a hole or a vacuum that is quite dangerous, because when the markets do go pear-shaped, and say for example there's some geopolitical crisis or socio-economic crisis, that's what creates a flash crash, because you have a market built on sand that has no fundamental support. So there aren't buyers there that are going to come in and support the market, and that's what creates crashes and bubbles in the stock market. So it's not very healthy. So although I'm a day trader and I don't really care whichever way the market moves, I mean, I'm up 230 points in a week, just 3 trading days. So don't get me wrong, I'm not complaining, okay? Life is good, I'm making money, etc. Obviously with my subscribers and the live analysis service, so I can't complain. But I'm just saying, from an ethical point of view and just from a common sense approach, a logical approach, it's not very healthy for the stock market. As you see in my last video, I expected a H&S reversal and a top on the FTSE, and we're expecting, obviously that failed. Why? Because of QE. The fact that everybody was expecting a dovish statement and more Kool-Aid, etc., and no more tapering this year, delay till next year. Obviously that didn't transpire, and that's why we've seen the sell-off today. Obviously the FOMC minutes were leaked because the markets are rigged, hence the reason why the FTSE 100 was looking very bearish yesterday and created a topping tail prior to the actual FOMC minutes at 7 PM. So it's all inside information, but as traders, it's our job is to try and read what the big boys are doing, see and try and read what the dirty players who have inside information and are trading, insider trading, etc., see exactly how they're playing the markets, so we can gauge price action because we follow their insider trades. That's basically what we're doing. And obviously we observe our variables, the fact that especially my last 2 videos ago when I explained that there would be a top in the FTSE, that was based on the fact that the Aussie was being crushed, the euro was holding resistance, oil was getting crushed, copper was holding resistance, gold was holding resistance, getting hammered, which it has again today. Okay, adding the fact that the yen pairs were into resistance, adding the fact that the Shanghai index was exceptionally weak. So if you add all that in together, based on intermarket analysis, that is a top in the market. But unfortunately, given the fact that the markets are so juiced up and they want to continue to keep rising higher and higher and higher based on the Kool-Aid, okay, based on hope of more Kool-Aid, then unfortunately the markets can become irrational longer than we, hence the statement, markets be irrational longer than we can remain solvent. So that's where that phrase comes from. But as day traders, I mean, I only risk 30-40 pips per trade, and for me it doesn't really matter which direction it goes. Like I said, I'm up 230 points so far. Hopefully I'll look to make a 400 points for the weekend, and life is good for me. I don't really care which direction it goes. But again, our job as day traders is to take the best optimal setup. We put our stop losses in place, and that's what they are there to protect us. If our analysis is incorrect, then we can go back to the drawing board, reanalyze the market, and start anew. Okay, so let's start anew. Okay, so FTSE 250 chart first of all. Obviously, daily chart here, holding this resistance line. It has been very obedient. The fact that the FTSE 250 daily chart is at resistance and holding the upper channel should say everything with regards to the FTSE itself. So let's go to the FTSE 100 now. Daily chart. Okay, so daily chart, as you can see here, a topping tail. Okay, that's exactly what was put in today prior to the Fed, by the way, so that's quite interesting. Again, inside information, they already knew, they already had the minutes, I mean, let's stop kidding here. These individuals that have people like Goldman Sachs that trade 3 months or 6 months in a row without a single bad day. That's all inside information. That's all it is, literally. Obviously, we know about the VIP list from the Federal Reserve leaking out the minutes 1 week in advance, let alone a day in advance. So they can, obviously, the big boys can position themselves accordingly, and therefore have never have a loss in 6 months to 3 months. Okay, so it's all dirty trading, but as traders, like I said, let's try not get involved too much with regards to that. It's all noise from our perspective. We just obviously refer to our charts and have to follow the fundamental news flow. Obviously, trade accordingly. Okay, so again, topping tail on the FTSE 100. That's the most important thing from my perspective. Okay, so keep an eye on that. Okay, that should be quite interesting. Topping tail generally refers to a reversal. Obviously, the weekly chart is at resistance, as we all know. Okay, around the 6800 level. So definitely topping tail daily. So bear that in mind. The larger time frames, the 250 and the daily chart are both into resistance. So let's quickly go to our 10-minute chart and lower time frames, 10-minute and 60-minute, which I tend to observe. Okay, so FTSE 100, where art thou? Where is the FTSE 100? Bear with me. Not sure where the FTSE 100's gone. There you go. Okay, so 10-minute chart. Okay, so obviously we had this downward sloping wedge pattern. Okay, so the fact that the market's obedient, you have a support level going into tomorrow at 6760, which more than likely we're going to get a gap down. So the next level is going to be around the 200 MA, which, to be honest with you, more than likely, given the sell-off and obviously pressure in the US markets, and most likely will filter through to the Asian markets. The next level of support we have 6740. Good support we have around the 6730 level, around the 6720, and the ultimate support will be at 6700. So watch out for 6700 tomorrow. That should really get tested. Okay, let's go to our 60-minute chart, and this explains everything. Okay, so look for this gap over here. So keep an eye on this gap here, 6580 level. I expect this gap to be closed eventually, especially the fact that the tapering has been tapering is still on the table for December. Okay, so that should really shake these QE junkies. Okay, which is quite healthy from my perspective. At least we get normal markets again. Okay, so purple trend line, key trend line to watch, 6740 level is support. But bear in mind the fact that we have a H&S formation. So if the market does obviously move, does remain high or gap higher around the 6780 level, 6790 level, I'll certainly be looking for a short on tomorrow and looking for it to break, and obviously eventually we should test the 6700 level tomorrow, which again it coincides with the 10-minute chart. Okay, and that should be quite an important level here, 6700. Keep an eye on that. Again, that's the H&S formation target as well, which is very interesting. Okay, if we do obviously sustain and keep selling off tomorrow, then 6650 level should be very interesting to watch, and obviously a 6580 gap level below. Okay, so we've broken the bullish channel here, H&S formation, looking for a reversal on the downside. Okay, so again, just quickly revisit the daily chart. Let's have a look where previous resistance equals support. So previous resistance equals support at 6700. Again, quite interesting, given the fact that smaller time frames are alluding to 6700. And previous resistance equals support at 6650. Again, quite interesting, given that the smaller time frames are alluding to support in that region again. Okay, so there's certainly two areas that we keep an eye out for tomorrow, provided the market obviously sustains its move lower. Okay, and I'll wrap it up there, folks. So risk on, risk off, wax on, wax off, or I think the term should be rephrased like I've mentioned on Twitter. It should be Kool-Aid on, Kool-Aid off, given that these QE junkies are buying every dip at present. Goodbye now.